Do you expect the market to go up or down depending on the results of the presidential election? A lot of people have strong opinions on who they think's going to win and what would happen to the market if either candidate won. Although it would be rather nice if we could make money without actually knowing who's going to win or if the market's going to go up or down, just that it's going somewhere. And that's what I want to talk about today. When you have extreme volatility or concerns about a major shift in the market, there is a strategy you can use to actually make a decent amount of money. I have this article in front of me, How Presidential Elections Affect the Stock Market, from US Bank's Wealth Management Division. I think it's okay. There are a lot of abstractions and generalizations. It's really hard to give a decisive answer, and I think they do an okay job of trying to write out possibilities. What I have in front of you is SPY. Many people know it as the S&P 500. This technically isn't the index itself, but it tracks the S&P 500, and people love it because you can just buy and sell it like you would a traditional stock. This is SPY during the 2016 election, starting in October. And here, of course, is November 3rd and 4th. As we could see, there was a lot of market hesitation, which isn't surprising at all. Tons of people have very strong views on what they think will happen, or if something happens that they don't like, the market's going to go down or up. It's hard to really get a clear answer, but we saw hesitation, which honestly is not surprising. So SPY went down. And then, after President Trump won, the market skyrocketed. It went up. Now, that's a lot of volatility here. If you want to make money utilizing volatility, there is a strategy that is actually fairly effective at this. I have Options Profit Calculator open. This is a fantastic website that I highly recommend using if you want to get into trading options, or you could just use whatever is built into your brokerage. In this case, the strategy I'm talking about is a strangle. A strangle will net you profit if the stock goes up or down. So what's the catch? Well, the catch is if the stock stays relatively flat, then it's not going anywhere. So I'm going to input SPY as my stock to trade. And the way a strangle works is you simultaneously purchase a call and a put. If you're unfamiliar with options, I'll have a link in the description below for an introduction to options and how they work. This is more advanced. I recommend watching that video if you're not familiar with options. And then you can come back to this one. In terms of a call option, we have 339, and because there are a lot of mail-in ballots coming and it might take a little while to determine the election, rather than dealing with November 4th, we could do 6th or November 9th. Essentially, we buy a call at the current price, and then we purchase a put at the current price. And the result is a price graph that looks like this. You can see this is how a strangle functions. If the stock stays flat, then all of this money, which is nearly $1,700 that we spent on these options, well, they'll expire worthless. However, if there's a large jump or a large dip in the market, it doesn't matter the direction, just that it moves, we will make profit. And we begin to make profit at 5.4% in the case of the put, and profit at 5.2% in case of the call. There are a lot of different articles out there discussing different possibilities and the way things change before the market, so it's hard to know exactly how it will go. However, from looking at previous elections, it does look like the market tends to get cold feet right before an election. So instead of setting up your strangle way out here, it might make more sense to set up the strangle immediately before the election starts, because that's most likely when we'll get pretty large dips or variations, or people will just be panicked and uncertain, so they'll want to deal with cash. One thing to realize is that the election might not have the results that you're expecting. In this case, if you bought at the absolute bottom, the 208.55, and had your options expire at 218.50, that's only around a 4.55% shift. In the case of this spread, 4.55% is technically losing a small amount of money. However, we are dealing with SPY. This is a very large ETF that's difficult to move, and the options for it are pretty dang expensive. So it's worth considering if there's a particular stock you think will be heavily influenced by the results of the election, but you don't want to make any bets on who's going to win the election. You could always set up a strangle and have it expire a week or two after the election. It is something to consider, but it's obviously expensive. We spent nearly $1,700 on options in this case. and that really affects things big time. If they expire worthless, we lose all of that money, which is kind of sad. So I think it makes more sense to try to play a stock that you think will be influenced heavily by the election, but that doesn't have excessively high costs for their options. Although there is a lot of risk with this strategy. As mentioned before, all of this money can go away if they expire out of the money. They'll be completely worthless or almost completely worthless. You'll lose a lot of money, even though you do have technically infinite returns, but it's unlikely a lot of these stocks will change that much. You have to take a deep, long look at how much you're willing to risk and whether or not the risk is worth the upside. For me personally, I probably won't be performing any strangles for this election, unless there's any stocks that stick out to me at the last minute. But best of luck to you guys trading. If you didn't know about this strategy, hopefully this video educated you and you could potentially apply this to a stock that you think will swing heavily based off the election. If you want to jump into the stock market and start investing, I have a referral link in the description for Webull. If you sign up, you'll get 2 free stocks and have access to a fantastic mobile and web app.